have a few of our panelists. I'll give them the opportunity to introduce themselves, but here, good friend Varun as well, who author of the Singapore, the FinTech Nation. We have Rashmi from 16th Street Capital joining us virtually, and as well as Yinglan from Insignia, Dirk from BEENEXT, Heang from Qualgro, and Tomoyuki from SBI Investments. So further ado, we would like to start with introductions. Varun.
For the last 1 year, we have been working together, me and Pauline, to bring together the story of how Singapore became a fintech nation and how Singapore is helping the rest of Southeast Asia and Asia Pacific to build a fintech ecosystem here. And we look forward to discuss with our panelists around how they are seeing the investment landscape come and emerge in Southeast Asia. Dirk?
Sure, hi. Dirk from Quaquebeke. I run a venture capital firm focused on investment in the early stage in Southeast Asia and India and Japan. We manage across 5 funds where the partners are all based in Singapore, but we travel very frequently, and we have been very fortunate and lucky to call Singapore our home and base to do what we do. Yeah?
I'm Heang, Chhor. Very honored to be here. Thank you very much for FinTech Festival to invite us, and great to be among friends. Qualgro is a regional VC based in Singapore. We invest into Series A and B companies across the region, in particular in data, AI, and SaaS companies. FinTech is, of course, one of our main verticals.
Yinglan?
Hi, Yinglan. Thank you so much for the invite. I think kudos to the MAS and organizing committee for pulling off such an incredible event. 5 days, 24 hours each. Very incredible. Good job. I'm Yinglan. I run Insignia Ventures Partners. We are in our second fund. Our last fund was 200 million. We invest in early stage Southeast Asia tech companies, and FinTech is a big part of our portfolio, including companies like PayFast in Indonesia and Flip as well. Thank you.
Tomoyuki-san?
It's my pleasure to be here. I'm Tomoyuki, Executive Officer of SBI Investment. We are the investment arm of SBI Group, which is the largest internet-based financial conglomerate in Japan, with the largest online bank and online broker in Japan. And we are heavily focusing on FinTech, of course, because we are a FinTech group. And we invested in more than 100 FinTech companies around the world, including a lot of FinTech companies in this Southeast Asian region. And yeah, so I look forward to working with you all. Thank you.
Rashmi?
Thanks, everyone. Hi, I'm Rashmi Kwatra. Pleasure to be here. I founded 16th Street Capital. 16th Street invests in equities, mostly growing companies in South and Southeast Asia. We look for great teams, great founders, and we partner with them for the very long haul. We've done a lot of work in financial and digital inclusion, so it's a pleasure to be here at the FinTech Festival today.
Right, let's kick it off then. Thank you for those introductions. So let's just put it into context, ASEAN. By 2030, ASEAN is predicted to reach a GDP of $4.3 trillion. Also with a population, one of the largest populations after China, India, and Europe, and the 6th largest economic bloc. So with that in mind, what gets the VC industry here in the region most excited? Why don't we start with you, Dirk?
Sure. Let me reflect. So I guess the themes change a little bit over time, but obviously you touched upon sort of the sheer size, the population size, et cetera, the macro factors. But ultimately it comes down to, for me personally, to the delta and the impact you can drive in this part of the world. And for that, I think FinTech is an essential piece. And when we think about really like more broadly and more abstractly FinTech, I think of money. And money should be really anywhere and everywhere, right? To enable, to accelerate. But without fertile ground, money is useless. So if there's no commerce, if there's no something else that it goes together with, So when we think about sort of excitement in this part of the world and the delta we can create, I think it's a lot larger than in developed countries by making money omnipresent in whatever shape or form, whether it's in FX or lending or treasury or wealth services. It's really the delta and the impact and the absolute base where we are starting, which is much, much lower, which with higher growth rates, which simply allows in larger population sets to longer compound. So I feel I sound like Warren Buffett, but that's what I think.
Heang,
I am very, very optimistic about the opportunities in the region, in particular in FinTech. Obviously, there's a growing demand for digital financial services, despite the pandemic that, of course, has been a tragedy for all of us. But very clearly, demand for digital-based services in FinTech in particular can only increase. And I'm very encouraged to see a cohort of founders coming up, not only consumers, but founders that are going to help us build future great companies in FinTech, whether it is welfare management, whether it is payment services, or more tech-based companies that would provide software, data, AI platforms to not only startups, but large financial institutions. So very, very optimistic about this.
So I'm assuming that most of you are actually bullish about it, and I'll come to the rest of it. Can you also cover what the risks you foresee? Because I'm assuming not everything is bright, shiny. Are there any gray lines or any clouds which you see as well? Yinglan, as you cover.
Sure. Yeah, I think Dirk and Heang covered it quite well. I just add 2 more points on the bullishness and some of the risks that's there. I think the opportunity is immense because, I mean, you look at the percentage of population that's unbanked. You look at Indonesia, it's roughly 50%. Vietnam is somewhere around 60%. Philippines around 60% as well. So the amount of digitization that can help this unbanked get access to digital services is immense. So that's one. I think on the risk side, I think we see another interesting trend, which is, I think the first wave of FinTech, there was this whole unbundling of the banks, right? So the banks start to spin out into, I mean, the separate startups that start to, unbundle the bank, like peer-to-peer lending, like wealth management, like brokerages. But then they realized that there's regulatory requirements. You saw what happened to Ant Financial. You see, there's also high customer acquisition costs, as some of the peer-to-peer lending companies experience. And I think you also see a lot of, lack of stickiness or difficulty in retaining customers. And now we are seeing a second wave, which is the rebundling of the banks, or rebundling of financial services. So, Dirk and I are investors in the company called Tonic, which is one of the first digital banks in Philippines. And then a couple of our companies like PayFast and Flip are doing the same thing in Indonesia. I think that's a very interesting sort of full circle, right? So it started off with the banks, then the unbundling, and now it's the rebundling of some of these banking services to address some of the risks that we see in the first wave of FinTech.
I think that's can I just jump in?
Please,
I think so, right? So I think that's a great point. Where worry maybe on the risk side is, in the end, the internet is network effect driven, right? So more goes to the powerful, and the top consolidates power. And I think it's far out in our part of the world, but I think ultimately there will be really seismic risk in 10 years. What if, let's assume in China, Ant Financial goes out of business, right? As an example. I mean, I'm not assuming they are, but it's really a concentration of risk. So we have seen obviously consolidation in banking systems, etc., but it also just becomes a very, very huge risk to the system overall.
And Tomoyuki-san, you see Japanese investors investing globally, and some of the largest investments have been coming in from the funds and groups based out of Japan. Where do you see the opportunities and risks from your side, because you cover beyond ASEAN as well?
Yes, actually I see huge opportunities in this region. We see more unicorns than in Japan. And the good points, one of the good points is that in addition to the digitalization opportunities, we can take in the economic growth in this region. Compared with Japan or developed countries, the economic growth is like 4% or 5% in this region. So that's a very attractive point. So that's why we are accelerating the investment into this region. And if I had to choose a risk, I think people investing in this region sometimes do not understand the fragmented parts of this region. So they think like the Southeast Asia is like EU, especially when they are coming from Europe. So they regard Singapore as a city like Luxembourg. And then they think, in EU, if you get a banking license, then you can do the passport licensing in other EU country, right? But in this region, it's not like that, right? So then sometimes they come to Singapore and they understand they cannot do this and they go back, right? So so the companies who wants to expand the businesses, or startups who wants to expand the business in this region, needs to understand that the region is fragmented. We of course need to do the localization, understand the regulations in each country, and I think the government also needs to explain to them how they can expand their businesses in this region. But in terms of regulations, I think Singapore is has a very flexible attitude. So that's a very attractive point, and especially when we compare this with the US. So that's a very attractive point. So that's why we SBI during this week, Singapore FinTech Festival, announced that we are going to set up a joint venture with SDX, a 100% owned subsidiary of Swiss Stock Exchange, to start the security tokens offering platform business. So yeah, I think huge opportunities, but we need to explain to the investors and startups coming to this region that region is still fragmented, and I think in the long term, if this region is getting united, that's the best thing for the economy and the startups around the world coming to this region.
Rashmi?
Yeah, it's not just, Singapore versus Luxembourg, but even within our markets, it's the non-metro areas that are, 7 times larger than the metro areas. And that's where predominantly the growth is coming from today. So it's about, the huge opportunity that's exciting about targeting that addressable market, which, of course, FinTech has a huge part to play. But it's also about understanding those nuances in targeting this segment and, the localization needed. A lot of great companies have done a lot of good work kind of bringing, the Warung stores or mom and pop shops in Indonesia, sari-sari stores in the Philippines, Kirana stores in South Asia. But it's about connecting them and bringing them online as well, which offers huge potential. But those are some of the nuances that I think when we're thinking about investing in this part of the market and kind of the future growth leg, it's how do you marry these pieces and think about, the necessity to kind of be very inclusive in this process, because to get this, non-urban population really online and transacting, you need them to trust that if they do need access to capital in a short time frame, that they'll be able to get it, from their mom and pop shops or Warung stores that are close by to them. So it's some of these, localizations and thought process about the next leg of growth that we're really excited about, and we have to think about, who's going to be capturing that market.
Fantastic, thank you, Rashmi. So interested here to hear more about the investment trends. So over the COVID period, we've seen a lot of interest from a funding perspective going towards mid and mature fintechs. This in Q3, actually, we saw 65% of the equity funding going into fintechs, going to some of into a selected few. Really, some of these mature fundings like PayFast, ACO, Tunes, Policy Bazaar, etc. What do you see from an investment trend this moving towards, and where do you see the gap? Because for a viable ecosystem, we need really that proliferation of startups as well.
Dirk?
Sure. I'll talk about maybe two things. So we have not all trends covered. I guess all co-panelists could talk about all trends. But I think the two things that are sort of important for me go back to the initial point I made on the omnipresence of money and how to enable that. And they're really embedded finance and creating platforms that combine payment as well as financial products in a way that's consumable and embeddable through APIs into a captive product that owns a consumer. So example would be if a Tokopedia wants to sell insurance or something at the moment of truth, when somebody buys something, it's available. If a marketplace is designing a workflow that has some sort of a cash need or cash collection need, it can do so with a prepaid virtual debit card and hand that out to their employees, and it consolidates in the back end. So I think the automation as well as the embeddedment and the ability to communicate between these pieces is crucial. Which leads me to sort of the second point where I often zigzag in my head. Are we going to get there first from sort of dismantling, or not dismantling, but unbundling and rebundling of the existing ecosystem? Or do we get there first by a broader adoption of cryptocurrencies, which by design are basically modular, integratable, embeddable, talk to each other, etc. And I don't have a good answer, but I can list a few companies we invested in sort of the segment of SME neobanking, unbundling of APIs in the fintech areas for banking products. So in India, we invested in a company called YapApp, which essentially does nothing else but collaborate, has a payment gateway, but it also has basically the ability to integrate financial products through APIs and workflows of digital incumbents. So consume fintech products at the moment of truth, omnipresence. I think that's important. The second one is an SME neobank, which now touches 1 million SMEs in India, called OpenBank. It's the leading SME neobank in the country that combines sort of like a current account with all sorts of layers of automation on the accounting side, the current account, payment product, as well as digital financial products that can be used and combined in your daily operations internally or embedded outside in workflows with partners. And then maybe a last one here in this part of the world, which has also worked very closely with actually the MAS, and I think both of you are familiar with them. It's a company called Brancas, which is very similar to Yap, essentially working very closely with the banks to create standardization for enabling, embedding, and omnipresence of financial products in this part of the world, together in collaboration with banks as well as regulators. Some of the markets that we're in don't have yet, I don't want to say the sophistication, just the time to adopt to sort of standardizing open banking regulations. And I think they're part of that change process. Maybe those two trends, and let's stop there.
As mentioned, we see many opportunities. We try to look for companies that really make a difference in terms of either supplying financial services to segments of consumers that are not well covered today, or try to find companies that provide real tech-based advantages for delivering financial services. Typically, for example, we are looking at companies that are providing loans to students, for example, which is a huge segment, well untapped, underserved today. Another one is, as Rashmi said, consumers that are in the non-metro area. Those are the next consumers that all fintech companies should aim to serve. Obviously, this requires more infrastructure, more broadband access, more user-friendly apps, etc. That's the first type of opportunities that we are going after. The second one are more tech-based companies, and this is something that I believe Singapore and Southeast Asia could make a real difference. What do I mean by that? Companies that can provide a AI platform for helping, for example, wealth management companies or even large banks to use data in a very secure and private way to understand better the consumers, who they are, their behavior, what they could buy, how we can support them further. It could also be software that would enable to power transactions in a much more user-friendly way, but at the same time, very secured way. And in this respect, coming back to the point of risk, I think our main risk in Southeast Asia and Singapore in particular is not so much about regulations or privacy, because I'm very confident that MAS and other large central banks are going to take care of that. The main risk for me is the missed opportunities. The missed opportunities of not having the right expertise to come to Singapore and the region for helping the startup entrepreneurs that do not always have the technical expertise in the banking sector. Credit scoring is one, for example. Or missed opportunities in terms of not providing the right infrastructure for capturing the non-metro consumers, and missed opportunities for not connecting entrepreneurs with research centers such as A-Star in Singapore, for example, or with IMDA that can provide incredible support to them to get going in their first phase of their startups.
Yeah. Now, we love to invest in platforms that has a network effect that collects data, and it's a self-enriching platform, in terms of collection of data. So 2 examples. I think one is a company called PayFast, which was mentioned. They have now 300,000 agents in Indonesia that does a lot of things that lubricates the unbanked and non-metro area residents, right? So from bill payment to phone top up to paying for their mom and pop shops supplies. So we've done a lot of things on top of PayFast. So we have co-invested with PayFast in a invoice factoring company. We co-invested with PayFast in a logistics supply chain company called Shipper. And this leverages the whole agent network that lubricates the banking process for areas that doesn't have a bank. So I think that's one big thesis for the unbanked. The other one is for the urban areas. We have an interesting company called Flip, which is a fascinating company, because in Indonesia, if you transfer money from bank to a bank, it costs 50 cents, which is like which is the price of a bowl of noodles. So Flip allows consumers to transfer money from bank to bank for free. And in a traditional sort of banking app, you have to use like 10 clicks, and it takes like 5 minutes. In Flip's case, it takes like 3 clicks, and it's effortless, right? So that, I think, is one of the big trends that we see, that the consumification of banking services, I think, it has to be more catered to millennials. Instead of millennials going to the bank physically, now they want to transact over the app. It's important to make it seamless and frictionless.
And for all these opportunities which all of you shared, and I'll go to the rest of the panelists as well, what's the end goal we are looking at? You mentioned about missed opportunities. Are they looking at a specific exit milestone? Is the Southeast Asian landscape gearing towards that, or is profitability, if they have to pick between profitability and hitting all opportunities? Because hitting all opportunity comes with a cost in terms of capital, time. So as founders have to balance between profitability, because that's becoming a larger priority in front of all investors, and stuff going IPO through SPACs and stuff. So from a founder's perspective, if they have to prioritize between profitability, paths to exit, missed opportunities, I agree they would probably not be all mutually exclusive, but in terms of how do you advise your founders? Because I'm more keen to hear, your founders will be having these questions. Are you having similar conversations? How are you helping them prioritize some of these queries and questions? Pauline, how do you think that next coming year is that important for that critical prioritization?
Yeah, no, absolutely. I mean, I think let's go to take it to Rashmi, perhaps to see how you're advising your founders.
I think we definitely advise our founders first and foremost to think long term. And I think ASEAN, offers us the opportunity to really think not just 10 years, 30 years, but definitely for the next 10 years, the opportunity here from all the, that was mentioned is really great. So the first and foremost is let's think long-term. For our businesses that are already listed, we talk about, how can they be much larger and still, very viable 10 years from now. And those that are not listed, very much to think like a company that could IPO one day and provide a sustainable ecosystem for all of their stakeholders. And therefore, it's not really just build to sell, but build to create and build to support really the infrastructure and help create the infrastructure to make the changes that we need in these markets. So that's definitely my advice. As to, some of the key trends the other panelists talked about that, where do we see these opportunity sets? It's very much, even before getting to deep tech, we're solving for very practical issues here in South and Southeast Asia, a lot of cash in the economy. So I talked about, the opportunities in, connecting kind of the unbanked to being banked. And we have a portfolio company called, BCash in Bangladesh. They had 30 million customers just a few years ago, 50 million customers today, 250,000 agents, which act as an intermediary, for the unbanked into the financial services industry. And that is still a very important trend. And then working with the SMEs, as many of the panelists have mentioned, is so important to enable them to better, monitor their businesses, whether it's their supply, their inventory, their customer needs, and therefore give them the ability to scale. And then the access, what's happening is all of this data that we're now able to collect from, the larger part of the population is providing much more, granularity into how these economies, sub-economies, microeconomies within each region work and how these small businesses work, which allows us long-term to provide, credit to them at much more affordable rates, which helps build out the entire ecosystem. On that, you can layer on other financial products. We're talking about, banking penetration products being low. Insurance penetration is even lower, for example. And I think the highlight of this year has been, some of these financial products that used to be kind of a push product, people had to educate the rural public as to why insurance is important. They're becoming a pull product. People are asking about these things. And building this ecosystem one by one and thinking very long term, I think, is definitely my advice to my founders, because we have the ability to do this for a very long time and build something that creates a lot of value for all stakeholders.
Tomoyuki-san?
The same question? Yes. So definitely my advice to the founders is to make profits instead of just keep the growth for the top line. So I'll give you a simple example. Actually, we are not a big fan of pure B2C neobank or challenger bank. So we think their customer acquisition cost is very high, and we don't see many of them making profits. Instead, they're losing like hundreds of millions of money every year. And so we always talk about the unit economics and how to scale the business, how to make profits, because without that, once you lose the momentum and then the company cannot raise the funds, then they just have to go down round and then sell the company. And it's actually has started to happen in Europe. That's my view. So that's why the portfolio companies of ours in this space is one, B2B2C model, banking as a platform. We invested in, we led the Series A of Solaris Bank, the pioneer of banking as a platform. Yeah. So now the word embedded finance is going around, and it was mentioned, just like it was mentioned. And this is partly because this kind of platform is going around. So many startups have started to build up ecosystem on top of these platforms so that they can focus on a specific layer. For example, financial services or only for freelancers or something like that. And when we see this kind of ecosystem growing, I see a lot of benefits for the consumers with the specific services tailored to those layers. And yes, and another one we invested in is the pioneer of SME Challenger Bank. So it's not B2C, and this company is called Tide, and they are getting 100 million of subsidy from the government, so they can use it for marketing. So that's first point, and they actually have a very solid way of thinking towards the profit. So that's why we invested in them. So I think without pursuing profit, the startups will not be able to survive in the midterm or in the long term. So definitely my advice is to pursue the profit. That's my advice.
I can jump in there
Yeah.
to just add in a bit. So I think there's sort of two spectrum of looking at things, right? I think on one spectrum is like transaction growth or GTB growth at all costs, right? I think that's gone are the days of where that mindset is prevailing. Then on one extreme is I guess maximizing profits, but that may be sacrificing future growth. I think the right answer is probably somewhere in the middle, depending on which side of the house you are at. And my personal view is at least the real question that we tell our founders is, are you creating value, right? And how is the value that you created being manifested? Now, as long as you are demonstrating that you're creating value, the value is sustainable, the value is, your users are retained, it's okay to be on, I guess, a slightly right side of the spectrum where there's growth, but the profit may not have manifested currently, as long as it can manifest in the future, as long as there's demonstration that there's value creation. And at least that's our advice to founders that we have in the portfolio.
Growth and profitability has always been and will continue to be a balance. And we have to strike the right balance, obviously. I just wanted to take this opportunity to say fantastic job to the founders, not only of our portfolio, but all founders in the region. Yeah. 2020 in particular has been a tough year for founders. For VCs, it's not that difficult. And I trust founders that are able to find the right way to navigate this difficult year ending now, but also 2021. Basically, there are two things that I would like to continue to advise them to do. The first one is to do more with less. It can sound a little bit generic, but I have seen a number of founders that are able to acquire many more leads, launch many more products, get more data by reducing the cost of doing those things by 20, 30, or even sometimes 40%. Some of our companies have been able to recover their revenue from January, February in the past 2-3 months with 30% less cost. So do more with less. You are able to do that, founders. We will back you up. The second one is really to take advantage of technology. After COVID, the digital world will only increase in pace, in penetration. Without data, without the right software, without the right infrastructure, you will be lagging behind. And as partners to startups for 5-10 years, we would like you, founders, to win in the midterm, not just optimize for the short term. And without better technology capabilities, it may be more difficult.
Great, no, that's a perfect segue on founders. One of the sessions that we have at the Singapore FinTech Festival is Green Shoots. And in Green Shoots, we have this series called Ask Me Anything, hosted at Rapid by Joel. And we had an exit interview from one of our founders, Praj from Neum. And sadly, he's going to be moving next year to the Valley. And one of the reasons he mentioned that he's doing this is a few things. One is exits. We haven't had in the region, in ASEAN, some significant exits, and also visibility. In the US, when he's selling to clients, they're always very impressed by the number of clients that he has in his portfolio. So he's going really to scale, to develop, and really to increase that visibility and potential valuation. Higher valuation. So I'd like your opinion to what would be the advice to make sure we continue to attract talent, but continue with funding, but also how do we make sure that the valuation and visibility to our fintechs is there in the region?
And how do we ensure that if there are public market or private market, what kind of exit opportunities they should aim for? And if not, then should they have dual centers of operations, one investment office, one operations office? How do you look at that in your portfolio companies, and how do you advise your founders about some of these things? Dirk?
Yes.
As usual, first one.
Yeah.
I mean, both your prior question and this questions are great questions, and I think there are many dimension and perspective to it, to be honest. But let me pick up maybe some concrete examples. So I have full respect and I understand why he's doing it. Because for his business model, it makes sense. So it really starts with the business model as well as with where your market is. And if you have a chance to internationalize and go to an international market, and the US being the epicenter potentially for many things, including fintech, you just get more connected. That's one perspective. And we see that in a lot of our Indian companies that build global products, leverage their strength from India to sell to the world in software as a service, but actually go after international markets. I encourage, and sometimes I even make it a condition precedent for me to invest that one of the co-founders moves to the US. Why? Because you want to be close to your market. Second perspective is, as you, and we're now 5 years in, so we have 180 companies, so we're starting to think in exit terms. When you sell, also now going maybe to an LP level, my investors, when you look at our markets, there's also how much is fundamental local currency worth versus US dollar if the denomination currency that you measure your returns on ultimately is US dollar, right? So selling to a US, maybe leveraging India and selling to US dollar and in US dollar, you only have to achieve 20% growth month on month, and not maybe 30 or 40 to make due for the FX changes to be expected in these markets. Last point, if you think of ultimately exit and the epitome of exit, right? Many founders, when they go and they IPO and they ring the bell in NASDAQ, and I hope many of you will do that, they feel they arrived, right? And I think that celebration of IPO on the one hand, but also the depth, the liquidity, the sophistication, all of that in the US, we have a lot to learn in this part of the market. And I think a recent example would be this whole SPAC craze, which is essentially a publicly listed vehicle that acquires a private company, shortens the process. Just the sheer lack of knowledge in the investor community as well as in the founder community, and then sort of the bench that actually has to execute IPOs is very thin here, right? So we need to improve, we need to work harder, and obviously it starts with examples of success. And I think with that, and everybody's working hard on that, investors, founders, everybody, and we will get there, but it will take some time. But it also requires regulators to think hard, how can they contribute? So if you think Singapore in isolation, and obviously this cannot be all on Singapore, but Singapore in isolation did phenomenal in the early days of startup ecosystem launching TIS, Technology Investment Scheme, where actually Yinglan was heavily involved at his days at
NRF.
Yeah, NRF, exactly. So enabling that kickstarting, but now we're getting to the state, how are we planning at scale for exits, consolidation, but also to build real ivory tower companies out of this part of the world that can sustain and sustain. And an example here would be SEA, right? Listing in NASDAQ has become their secret weapon to just, raise capital at unprecedented scale and thereby compete at unprecedented scale with local competitors. Pause or stop.
I agree with Dirk on the dream of entrepreneurs and VCs, of course, to have companies list on NASDAQ. But the point you're raising, Pauline, is much more fundamental. I think it's about the competitiveness of the tech ecosystem of Singapore and Southeast Asia versus other tech ecosystems around the world. In order to do that, we need to have the right talent, obviously, but in addition, we need to be able to produce successful businesses and deliver return for us as a VCs, right? In this respect, I really believe that there needs to be more shared view, convergence on the fact that we need to create successful businesses. If you look at, for example, the Google Temasek Bain report, fantastic report, there's not much mention about what are the successful businesses that our ecosystem has built. We talk more about investment size, which is critical, of course, but I would dream that we are able to also give a sense of how successful are we as an ecosystem to produce successful businesses that can go global, that can list on NASDAQ. Second, on exit, there are many ways to go exit, but there's one thing that I believe we should do a bit more in Southeast Asia is to find IPO opportunities for our companies in Southeast Asia. The Singapore Stock Exchange or Jakarta Stock Exchange could play a bigger role in this. I would really encourage SGX, for example, to have a deeper understanding of the cohort of companies that are based in Singapore and in the region that can become listed in SGX. You should do that. It would be a fabulous support to our ecosystem.
Yeah. I'll just add on a few points. I think C was mentioned, and I just checked the stock price. So C just became a $100 billion US company, right? Coming out of Southeast Asia, which is a phenomenal milestone. And if you think about where the world is going, right? I think Southeast Asia presents a very interesting opportunity. So we have China and US, the bifurcation, right? So I think Chinese companies are looking at more tech innovation. They realize they have to manufacture their own chips, right? And then the US folks, they're saying, hey, there's a lot of innovation in how Asian companies innovate, like Facebook versus WeChat, for example. So they're trying to adopt more business innovation. So we are in Southeast Asia, and I think Heang's at our office. We are sandwiched between the offices of Facebook. ByteDance is opening our new office. Tencent is opening our office down the road. So we are sort of sandwiched between the US and China companies looking for growth in Southeast Asia. The Chinese guys are looking more for, I guess, tech innovation. The US folks are looking for more business model innovation. And I think to the extent that we can help both sides, we can potentially profit out of it. I mean, in our portfolio, it's not strictly fintech, but we look at C as the benchmark, right? $100 billion company, but there are a lot of white spaces around there. So in our portfolio, I mean, we have Caro, the vertical commerce guys. I mean, you can never buy a car on Amazon or Alibaba. So, if you want to buy a car, Caro is the largest used car marketplace in Southeast Asia. We also have like the vertical players like for property, Pin Home in Indonesia and PropZ in Vietnam. Buy a house, you have to, you probably have to transact offline. And these are, I think, the interesting immediate adjacent opportunities for US or China investors looking at this part of the world, both in terms of companies going public or also in adjacent M&A opportunities, in the neighborhood.
Predictions.
Maybe I can chime in because
Sure.
I've been an investor in C since less than a $5 billion valuation. So seeing the trajectory, and we do a lot of private to public work, and it's one example we're touted today, but we have to realize that happened in just the last 2 years, and there is a lot happening in the ecosystem. I don't want to sound like a broken record, but time does play a part. We needed these markets to be ready. We needed the infrastructure to be laid down, whether it was, firstly, we got the cell phone penetration. We have data rollouts now. Some of the data rollouts in these markets are faster than they've ever been done in the developed markets. We're going to see a 5G rollout in India. So it was, you need everything to fit together, and that takes time. But what we've seen, but I don't want to discredit what's happened actually in the last, 5 years, and what that paves way for the next, when we hear founders maybe talk, it could be frustrating in a shorter time period, but what's happened, I want to shed light in the last 5 years that's going to, pave the way for, I think, the next decade also deserves a lot of credit. And I think, just as Yinglan mentioned, we're going to see many, many more examples. All of our investee companies, I hope, that can take that transition, and the depth of the capital markets improving. The SGX, I know, is doing a lot of work on encouraging listings in its home market. We have, potentially some listings that will come out in Jakarta, maybe some dual listings in the NASDAQ for now, but it is important that we also list. I always encourage, my investee companies to think about listing in their home markets as well to encourage the capital market network. So I just want to highlight that, a lot has happened in the last 5 years, and the pipeline, I think, for the entire ecosystem growth for the next decade, and all of this to kind of come together so that founders get the valuation and appreciation and actually want to be a part of the Asia ecosystem should translate.
Thank you so much. And as all of you shared about the opportunities around it and the NASDAQ listing opportunities, we summarized a lot of those learnings today. The key part, what I want to focus on in the last 5 minutes we have is, in terms of your key takeaways and what would you want to advise the other people on the fringe, people from Asia, what they can show to people in Europe and US, because we have a global audience coming in. And if there is, I would say, like a final soundbite for them, what they should look for in Asian ecosystem, how they can collaborate, how investors and companies from there who want to come here can collaborate with the Asian ecosystem. What would be your parting lines and message for them as 2021 comes to come and collaborate with the ASEAN landscape?
Should we go with?
Maybe.
Yeah.
Yeah, exactly.
Yes. So I would say this is related to the previous, the last question, but as mentioned, 5 years ago, we had one portfolio company in the IoT space, and they were in Japan, and they were having difficulties in raising funds, and they moved to Silicon Valley, and they were acquired by GE 6 months later. That happened 6 months ago. However, now, as mentioned, the startup ecosystem has matured in this region, and so even in this region, you see many acquirers like Alibaba or Alipay, Tencent, and also if you look at Tokopedia, we are a shareholder of this company, but they just closed a round with Google. So the US investors are coming into this region. So I would advise that you don't have to go to the US. You know the market in this region. So taking the growth of the economy and accelerate the digitalization, there are many unicorns coming up in this region. So just keep up the good, good job and grow the company. And then, as you mentioned, you can go public in the US. Lufax went public, OneConnect went public from our portfolio. So if you know the market in this region, stay here and just try to keep the growth. Would be my advice.
Thank you. So we have, I think, about 30 seconds per panelist. Your 2021 predictions, advice. Go for it.
It will only go up.
Chhor?
We are cautiously optimistic. Small caps for cautious, big caps for optimistic.
I'll keep it short. Get Varun's book on Singapore FinTech Nation. And then if you have time, get this book called Navigating ASEAN Innovation.
Rashmi?
This year has shown us that a lot of the growth and adoption we've seen has been pulled forward, and the infrastructure is really laid out for that combination of profitable, well-run companies on strong foundations that have a very long trajectory, and I'm very optimistic about the next several years.
Tomoyuki-san?
I'm also optimistic. So in the first place, Asian countries are doing better than Europe or the US under the pandemic. And also, we see vaccines going around. We have the Tokyo Olympics, and we see I predict the recovery of the economy, and investors are waiting for the pandemic to get over. And actually, the US investors have started to make a large investment. They got accustomed to working from home. They got accustomed to Zoom meetings. So I think there's a great chance for startups, especially in this region, next year.
Thank you, everyone. We'd like to thank our panelists.
Yes. Rashmi, Yinglan, Dirk, Heang, Tomoyuki-san, thank you very much.